Ladies and gentlemen, we got to break down what's going on after market hours right now in the stock market. We just had Facebook report, and let me tell you, they did not do well. The stock is crashing after market hours. We also have to break down Qualcomm, Spotify, and a couple of other ones, and I want to go over what I just did in the aftermarket hours. So if you guys find value, hit the like button, subscribe. Make sure to join my Patreon if you want all my buys, sells, call-outs, morning update videos, plus more. That's linked down below. And you guys could also get 5 stocks for Moo. Use my link, deposit $100, and you guys can get up to 5 stocks, each of which are valued up to $3,500. Get your free money and join the Patreon, link down below, and let's get right into the video. So look, just before close today, SPY, which tracks the S&P 500, you guys should know that by now, was trading at about $458 a share, and then once the market closed, this thing ended up dumping all the way to about $453. And the crazy thing is, we actually uptrended for the majority of the day today. I mean, we did start selling a bit in the morning up until 11:30, roughly noon here on the East Coast. And then the last 4 hours, the market started ripping, right, from about 453 all the way to 458. So we were showing, bullish momentum, if you will, on the intraday chart and on the 5-day chart heading into the close. I mean, look, the 5-day chart shows that SPY is uptrending still. It's doing pretty well. The bulls are in control. So we got aftermarket hours to aftermarket hours. We had Facebook report, and this changed course very quickly. Well, I guess it's still uptrending on the 5-day, but it completely erased those gains that we saw throughout the second half of the day today. Just like that, boom, the gains were wiped out because of Facebook's earnings. And when it comes to Triple Q, let's see what's going on there. Triple Q went up 0.8% on the day, but now it's down from 368 where it closed. Now it's trading at 362. So this thing is down about 1.7% after market hours, and it seems like the resistance on the 4-hour chart right by the 180 SMA is a pretty strong resistance, like I've been saying these past couple of days here on my YouTube channel, right, guys? I've been saying that about Triple Q, and I've been saying that, wait a second, did Triple Q just bounce back? What is going on there? Is this starting to gain some steam? Hold on, we'll take a look. But overall, we're still seeing resistance at that main moving average on SPY and Triple Q. So I mentioned this, guys. Volatility is here to stay. Don't be surprised if we get a couple of green days, then we get a huge dump out of nowhere after earnings or some random catalyst. This is going to be what is the vibe, if you will, of the markets this year probably, or at least a good chunk of this year, as we are seeing the Fed doing what the Fed's doing. Interest rate hikes. They're slowing down the purchases of bonds. They're coming to 0 purchases by March. This is hitting the markets. Reality is here, and we have to see what the Fed's going to do. Are they actually going to stay true to their word? I mean, the Fed's in a pickle right now. We're not going to talk about that too much in this video, but if they don't raise interest rates, what's going to happen is inflation is going to run wild, which it already is. So on one side of the coin, they have to raise rates to fight inflation, but on the other side of that coin, if they raise rates, it's going to hurt the stock market. So at this point, it's kind of like the Fed's trying to balance on this beam. What are they going to do? It's just a freaking crazy time period right now. And volatility, all I'm trying to say is that it's here. It's here to stay. It's here to stay. That's just the reality of the matter. So enough of the blabbering, enough of the talking. Let's get to the meat and potatoes, guys, because you guys saw the title. You see the big dump after hours. Facebook stock is causing this dump, and it is insane. I was not expecting this at all. I'll be honest, I was not expecting this, but Facebook stock, get this, guys. Get ready for this. It closed at $323 a share just about an hour and a half prior to me filming this video, and it went all the way from $323 to $244 after market hours. So you're telling me Facebook dropped 25%? Yeah, Yeah, that is what happened, guys. So this thing is getting decimated right now, and it is recovering a little bit, but still, it is down about $70 a share, which is insane. They did EPS of $3.67 versus $3.84, so they missed. They missed EPS. They missed estimates. Not good. Revenue came in at 33.67 versus 33.38 billion estimated. So they beat revenue by a slim margin. Not that bad. And we got Q4 monthly active users of about 2.91 billion, up 4% year over year, and daily active users of 1.93 billion, up 5% year over year. And like I always say, guys, with Facebook, I mentioned this in my Facebook video from last week where I wanted to initiate a position. It's funny how things work. Last week, I wanted to initiate a position, right? I didn't do it. And today, I'll just say it now, I just initiated a position in Facebook after market hours, and I got it locked in at $248 and I believe 75 cents, something like that. I posted on my Patreon. All you guys that join my Patreon, again, you get all my real-time moves. So I just initiated that position, and I'm thanking the trading, investing gods above, because if I bought the stock last week like I was about to, or was that earlier this week? Whatever, recently, right? If I was going to buy it, I would have got filled at about 300, maybe 310, something like that. And now I just got blessed with 248. So that's great. And again, the monthly active users, we have daily active users. Those are growing 4 or 5% respectively year over year, but it's slowing down. We know that. We've talked about that before. It's how many billions of people are they going to get on their platform, guys? It's going to slow down at some point. It's not going to be as easy as it was early days. So we know that they're not going to be growing that number crazy amount. And let me get some water, sipping my Starbucks cup here, guys. Shout out to Starbucks. But yeah. It's crazy. I mean, this is nuts. It's funny how things work again. So I got this at 248. They had family of apps revenue of 32.79 billion. So that is their apps, WhatsApp, Instagram, Facebook, Messenger, all that good stuff. And Reality Labs, which is their VR, AR segment of the business, they had revenue of about 877 million. And the kicker here is, guys, what's actually selling or setting the stock to go down is revenue guidance. Q1 revenue guidance is expected to be $27 to $29 billion, a growth of 3 to about 11%. Or versus the estimate, which was about $30.27 billion. So they guided down a good chunk on revenue, which is why we're seeing this catastrophic after-market hours dump. And for me, again, I initiated a position. I think Facebook, over the next 3-5 years, they're going to be very good, a very good company. I think my money is going to work for me, compound for me in a great way with Facebook at these valuations. And it's a no-brainer for me. If it was a no-brainer at 300 just a couple of days ago when the PE was, or just today, the PE was 23, it should be a no-brainer if the PE's like a 17 or an 18 or maybe even less compared to what just happened to the stock, or considering what just happened to the stock. So for me, it's a no-brainer. I initiated a position, and mind you, it's a small position to start out. Probably about a 10-15% initial position. So if it comes down more tomorrow, bring it on. I'll buy more. If it comes down more in a month, I'll buy more. And I think it's going to do well for me over these next couple of years, however long I decide to hold on to it, depending on, of course, what happens. So what do you guys think about that? Do you think I'm a moron? Please tell me. If I'm a moron, just tell me. Let me know in the comments. Do you think that was a good buy? Do you think it's stupid? Let me know. I would love to know, if you guys disagree with me, as always. And let's talk about Qualcomm. They just reported this after-market hours as well. And this stock went up 6% on the day. It went up to about 188, and when they reported earnings, it hit 198 initially. and now it's sitting at about 184. So wild swings for Qualcomm after hours. It hit 198, then it went down to 197. Jesus, guys, that was a 13% drop. And now it's back, like I said, to 184. So they did EPS of $3.23 versus $3.01 estimated. That beat EPS. That's great. Revenue came in at $10.71 billion versus $10.42 billion, so that beat as well. And they guided above estimates on both revenue and on EPS, which I'm assuming is why the stock initially hit that 198 level. It broke out, and I believe that might be an all-time high. Let's see here. Yeah, it seems like it is. So Qualcomm is showing momentum above, or at least towards 200, which is all-time high territory. So that's a very good sign, considering they consolidated for about 2 months. Look at this chart, guys. You know, ever since the last earnings report where the stock went ballistic, it went from 121 to 185. Ever since that point, it cooled off, rightfully so. Now they just reported great numbers. They reported nice guidance. Now it might go to the next leg up, 200 to 220. Don't be surprised if that's where Qualcomm goes. Seriously, you know, I'm not trying to pump the stock. I mean, it's a billion-dollar company, guys. I'm just telling you all what I'm thinking right now. So that's Qualcomm. Spotify, let's take a look at this one. Spotify's been under a lot of heat lately. Joe Rogan, artists leaving the platform, and quite honestly, I haven't even been keeping up on it. I really have no freaking idea what's going on, but I see the headlines, and I try to ignore a lot of the headlines. Just in general, I think a lot of the stuff is noise, but I've been hearing a lot about this, and you know, the company, this, that, the third, and they went down about 6% today, and they just reported earnings, and the stock is actually, oh my goodness, is it cratering right now? Oh, man, that's ugly. It closed at 190. It already went down 6% on the day, and now it's down. It went down from 190 to 147. Jesus, guys, 20% drop for Spotify. Now it's recovering a little bit, but still it's down a good 10%. Whew, that's not good. That's not good. So they must have, I was looking at their report before, but I didn't see this massive drop until now, which is crazy. I guess that came a little bit after I looked at the report. Either way, they did Q4 revenue of $2.68 billion, which is up 24% year over year. Not bad. Loss of 21 cents per share, and I believe they use euros over there, so this is in euros. And their monthly active users were about 408 million for the quarter, up about 18% year over year. So why is this falling? It's probably because of guidance. Q1 guidance. Here we go. Joe Rogan. Don't blame Joe Rogan. I mean, what's so wrong about Joe Rogan? The guy is crushing all the traditional media outlets. You guys have seen that chart where it's like he has 11 million or whatever, and CNN's like the last one. Fox is not looking good. You know, MSNBC. How could you hate Joe Rogan? This guy's revolutionary in terms of breaking traditional media. The guy's great. I mean, you can't complain, in my opinion, but a lot of people are going crazy about this guy, and maybe it's hurting the stock in the short term. I really don't know, and I'm not sure, again, what these estimates are. Let me see here. It's got to be poor Q1 guidance. I'm not seeing the guidance, though. That's the thing. Either way, guys, watch out for Spotify. This could be one. If it gets close to $100 a share, 150, which it pretty much is close to that now, this could be a play where the risk reward's decent. I have to look more into it. Of course, I haven't done a deep dive, but if you're telling me it went from 387, which is where it was a year ago, and let's say it got to 150, 125, if you're telling me it's down 60 to 65%, 70%, it might be worth doing the homework to see if it's a decent a buy for the long term, or even as a swing trade. I don't know. So keep your eyes on Spotify. We also had a line today report, EPS of 283 versus 273. That beat. We had revenue of 1.03 versus 1.02 billion. So a line had a double beat. ALGM is the ticker. Not too bad there. Let's see here. Guidance. I'm not seeing anything on guidance. Let's see here. Oh, they drop. Wait a second. Oh, I thought they said they dropped the revenue projections. They said the stock dropped after the revenue projections. All right, maybe that's not that good. It is down a little bit after hours. Where are the revenue projections, though? Come on, ThinkOrSwim, step up your game. Where is this? Where is it? I'm not seeing it, but I guess they dropped on the estimates, whatever, or the guidance. Either way, guys, this stock is down a ton. It's down about 30% from the recent highs. And is it recovering? It's too early to tell. I mean, it's too early to tell. And based on that report, it might not be recovering. But we did have AbbVie today. They did pretty well. They did 331 in EPS versus 328 estimated. They beat that. And they had revenue of about 14.89 versus 14.98. Okay, that's right. They did miss revenue by about 9 cents, or not 9 cents. What is that, billion? Or 9 million rather. So that's not the best, but the stock's kind of like, hey, let me wipe this off. Let me brush this off, and we're already going to be, we're breaking out. It's funny how things work. Sometimes they miss revenue, the stock still goes up. But if it's a growth beast like Facebook, let's say if they guide down on revenue, it's going to tank like we saw. So it kind of does depend on what kind of business it is. I mean, AbbVie's not really focusing on crushing top line every quarter. They're probably more focused on profitability, returning back to shareholders' dividends. So the stock is up, again, 1.18%. And I wouldn't be surprised if they raise their dividend and people are just piling in because of that. Let's see here. I bet you I'm right on that. Maybe not. Maybe not. I don't know. I'm not seeing anything on dividend, but they raised their dividend. I mean, I've done analysis on their dividend before. They have a nice growing 5-year compounded annual growth rate for the dividend, and the stock is looking like it is showing momentum out of roughly 138, which has been resistance for weeks. So this could be a play into the 140s. Watch out for AbbVie. We also have Lam Research, LRCX. This one's starting to show some nice upside, or at least early signs of upside. Today it went up 4% roughly, and it's really unchanged. I mean, it's down about $1 or $2 after hours, but really it's unchanged. And for a $611 stock, $1 or $2, $3 is not much. You know, it went up 4%, which is $22 on the day. So at this point, if we break the 50 moving average, I'm going to put my alert at maybe 615. This might see some upside. Don't be surprised if we start gunning for the mid 600s on Lam Research after they reported earnings last week, which from my memory, the earnings weren't bad. Let me see here. Oh, wow, look at that. We had a buy rating, outperform rating, buy rating, overweight rating, buy rating. So a lot of these firms are bullish. That's probably going to send it up. And it seems like they beat EPS, but they missed revenue. And the stock, like I said, it depends on the stock. This one is still pushing up as well. And J&J, look at J&J. This one's about to break out, in my opinion. It's trading right around 170, 173, 175. That's been resistance for a good almost 2 months. So keep your eyes on it, guys. If this takes out 175, I'm telling you, we're probably going back to the 180s. Look at this chart on the, maybe we'll put the alert at 174. Heck, 173.50. Let's do it, baby. There we go. So if we take a look at this chart, the high on this chart is 179, which I believe is the all-time high for J&J. Let's double-check that. Yup, it is. And if I pull up this 3-year, you can see how beautiful this uptrend is. And it's just gearing up for a breakout, in my opinion. And where would it go if we broke 174? Where does this chart show the uptrend will get us to? Probably anywhere from 180 to 185. So J&J, if it takes out 173.50 into the mid-170s, this, in my opinion, is a nice long in the short term. So I'm looking at it, and again, those are some thoughts on the markets, guys. Crazy, crazy day. Just when you think things are reversing, there's an earnings report that could come out that could wipe out everything. And we have Amazon tomorrow, and if they drop the ball, these markets could be back to selling in no time. I mean, Amazon, they're already down. A lot of these big tech stocks are down after hours just because Facebook reported bad numbers. Amazon's down $100. We have Google, which I might buy more of Google on this dip. It is down about $50 after hours. If Google gets down to about 2,800, 27, you bet your you know what, I'm going to be buying ahead of that split. I'm probably going to be buying a little bit more. It's crazy. Apple's probably down. And I almost forgot to mention, don't even look at Snapchat, guys. I'm a holder of Snapchat, and I'm getting destroyed on this position. It's down 17% after market hours. And luckily, it's a small speculative play for me. But the thing is, a lot of people out there probably have a lot of money in these unprofitable spec plays like Snapchat. And that's when you get wiped out. So you got to be careful. That's the lesson here. Me, I can handle it because it's a very small position. But other people probably can't handle it. So if you're too in a certain category of stocks, be careful. Be careful. You can make a lot of money doing that, but you could also get hit during the rough times, which right now, I'm not expecting Snapchat to go bankrupt, but we're seeing rough times. And the stock it's taking some heat right now. Let's be honest. So, yeah. Pretty much, Snap's getting hit, Facebook's getting hit. It's a ripple effect. That's what we're seeing. Pinterest is another one. This one's been down. I mean, it went down 9% on the day, and now on top of that, it is down 10%. So this one, just today alone, is down 20%. So these markets are volatile. We got to be careful. We have to have some cash, but we also have to not be afraid to put some money to work. If we see solid companies at good valuations that are profitable, that have cash to weather whatever storm we could be heading into, I think it's worth adding some money into these, putting money to work. Like I just put money to work in Facebook today. I just bought PayPal. You guys in my Patreon know I bought more PayPal today at about $131. I'm putting money to work in stocks that I believe in over the long term. And of course, I'm buying VOO. I'm buying my international ETFs. I'm buying my energy ETFs. I'm balanced. I'm diversified, guys. That's just the way I do it. I'm not one of these guys that owns 3 stocks. I own a bunch of stocks. Probably over 20 stocks. And I own a bunch of ETFs and index funds. That's how I do it, and it works for me. And I sell options, of course. I sell a bunch of options. So what do you think? Drop me a comment, hit the like button, subscribe, join my Patreon if you guys want all my moves, my Discord, private Discord. We're trying to build that up. It's looking good in there. We're trying to get some action in the Discord, right, guys? All that good stuff. The morning updates, the alerts, call-outs, that's on Patreon. Make sure to also get your 5 stocks from good old Moo. Use my link down below, deposit $100 with them, and you guys can get up to 5 stocks, each of which are valued up to $3,500. So get your money, join the Patreon, link down below. I'll catch you guys in the next video. Good luck in these crazy markets. Peace out, guys. Stay safe out there. See you soon.